Hello and welcome to the Monday Call. I'm James Grigger and I'm joined by my co-host Stephan Clark. Today we want to look at Iran from a slightly different angle. There is no shortage of headlines, hot takes and market reactions, but what often gets missed is the view from someone who has actually operated in conflict zones. So before we speak with NZ Fund CIO Mark Brooks to talk portfolios and markets, for the first half of this podcast, our guest is Leo Della Moretta. Leo is a former captain in the US Army who served both as an infantry and logistics corps officer, with deployments in Iraq and Afghanistan, and later as a peacekeeper in the Sinai, where I had the privilege of serving alongside him in 2008 and 2009. Latterly, Leo actually works in financial services and is a consultant with deep experience in operating model and AI-driven transformation. So we'll probably get him back on the podcast to talk about that. So rather than asking Leo to play politician or armchair strategist, we want to ask a simpler and more useful question. When someone with that background looks at Iran, what jumps out immediately? So, Leo, firstly, thank you very much for joining us. You're based in London now, so thanks for giving up your Sunday evening.
Happy to be here. Thank you.
You served in Iraq, Afghanistan, Sinai, and I think Iraq and Afghanistan multiple times, and across both infantry and logistics. That gives you a very practical lens on conflict, not just fighting power, but sustainment, movement, communications, and endurance. So I've got loads of questions. I've done such a long intro, about 18 minutes. So we'll start and see where we get to. But first, when you look at what's happening around Iran, what jumps out at first that civilians and investors like us probably miss?
The thing that pops out at me also kind of leans back to the fact that I grew up in El Salvador during and just after the Civil War there. And the bit that a lot of folks tend to forget is that life goes on. It's easy to see that the oil industry or the airline industry, for example, are severely disrupted. But if you take a look at the people who are on the ground, especially like in Dubai and Kuwait and Saudi Arabia, they're still ordering pizza. So they're finding ways to go about their lives. A friend of mine and his wife moved down there in July. And the number one thing that's changed for them is they've started to park their car across the street from their house because they've said, you know what? If the house gets hit by something, at least we'll have a car to react or be able to do something. Or vice versa, if the car gets hit, at least we have a house. But they're still going to school. They're not taking any evacuation flights. They're still ordering pizza.
So it's and I guess it's the new norm that you get used to. I guess
Pizza is pretty good.
Yeah, but it just shows how resilient humans can be. I guess at times.
Absolutely, everything becomes normal.
So do you see a conflict like this specific one differently from most people? Like, are there, is there something that you're looking at that going, hey, this is quite different from the experiences I've had in Iraq and Afghanistan?
The bit that's different for me is I remember seeing a couple pictures. I think it was the Palm Jumeirah hotel, and I remember seeing pictures of it with the fire and some obvious battle damage there. I remember thinking that is much smaller of damage than I would have expected, because I was thinking that Iran was launching telephone poles at these countries with not a lot of like foresight or aim. But then you just pay attention to news or you talk to people who are on the ground there, and you realize that they're UAVs. And UAVs were not a threat to U.S. or Western forces when I was operating in that theater. We had that technical dominance there. And it is a huge difference, because it just shows how technology has advanced dramatically, but also the cost of that technology and the ability to deploy it, the hurdle has dropped immensely. And the impact of that is that you have this massive overmatch that can be overcome by $30. Yeah. And so in order to defend against all the different threats that those countries have that are coming at them from Iran, you need a huge stack of air defense systems going up to the stratosphere. You need radar systems, jets in the air, refueling tankers, airfields, radars, all of that. and then a $20 or a $30,000, depending on which one it is, UAV comes along and still gets through. And so the asymmetry of what you can of the impact that you can have when you're on the offensive versus everything you have to do when you're on the defensive is completely night and day. And that psychological impact, because that technology enables it, is the one that is the draw, is the takeaway for me on that one.
Uh, do you find that would change much? Like for the first 24 hours that you're on the ground there, I know there's not so much boots on the ground, in masses amounts, but in that first 24 hours of conflict, is that something that you would be worrying about that's different? What is what is something that goes through your mind when you sort of drop into a conflict zone that is the first thing on your mind, especially when you're in command of soldiers who and you know them personally, you've been training with them for years.
So for me, if you talk about me dropping in as a soldier again and leading folks, I would be less concerned with those things, like the getting shot at. Like I said, it's the new normal. It's the job. You sign up for it. It's okay. The bit that I'd be more concerned with is making sure that the people that I'm leading have the ability to go to look themselves in the mirror in 30 years. It's easy to get scared and forget something, or it's easy to take a pot shot at something because you didn't want to take the time to develop the situation. Um, I myself, I've got some PTSD, and one of the things that I've learned is this concept of moral injury, is that you do some things in combat that logically, ethically, legally are all righteous and everything, but it still hurts you and you don't realize it, and it can stay with you for a long time. So for me, the focus for that first 24 hours would be making sure that people have, or you're trying to embed the confidence from them to stick to their morals, to stick to their values, to stick with their ethics, and still do the job. Because in that first 24 hours, you've done all the training. You have to believe in that foundation and have the confidence that you can do what you have to do and win when it comes to time to win and fight. But you want to do so in a way that you look back on it with pride and not with shame.
Is that something that's a big part of the US Army now, do you think? Is that something that you've learned, or is that something that's been indoctrinated into the training?
When I was in, it was massive in the training. There was an instance in Iraq where there was an accusation of a war crime against a Marine, and the accusation, within 24 hours, there was an investigation. The Marine was pulled back. The folks around him were pulled back, and in the end, he was cleared of what the accusation was. But the thing that always kind of stuck with me is that on that story and the conversations we would have about it is that just because you are fighting evil people like Al Qaeda in Iraq didn't mean that we were absolved of our moral obligations to be human. And when allegations arose, they were taken seriously by everybody. And so it was one of the bits that we're prouder of as a commissioned officer team, was that we saw ourselves and acted in ways that we believe were legal, moral, and ethical. And that's what we wanted all of our soldiers to do. That's what we demanded and required of them.
I guess that's a really good point when you think about whether whatever your view, one's view, anybody's view on what's happening now, you still have humans that are, I guess, taking these orders from the president and implementing them, and they have to implement those the best they can, vis-a-vis morals and ethics as much as they can, given it's a pretty testing and at times scary conflict.
Yeah, it's not as much as you can. It's a no fault situation. It's a no fail situation. You can't you don't get to be like, oh, I was scared. No, you're trained. You signed up for it. You do it the right way.
So when we think about the conflict now and some of this modern warfare that people call it, it's interesting actually when you think about Ukraine. It's almost gone backwards in the sense of they've still got drones and things like that, but it is more traditional warfare compared to, say, what's happening now. What do you think some of the key things that are different what are civilians? What are we looking at that perhaps is different from what you're seeing around how this warfare is taking place, especially with mostly through planes and bombings rather than boots on the ground.
The bit that's interesting about it, specifically about from the bombing perspective, and I'll give a little bit of an anecdote before I get into is I remember distinctly going out and leading patrols. We're doing counter roadside bomb patrols so that the logistics patrols could get through. When I was an infantry officer, and one of these patrols, we ended up taking contact by a roadside bomb. Did that, did what we had to do. Thankfully, nobody on our side was injured. And then 2 hours after I came back inside the wire, I went to my command post and I called my parents. I was a 22-year-old, 23-year-old, and I would call them 2 or 3 times a week just because that's what I did, because I had nothing else to do aside from read the same book over and over again or watch the same downloaded TV show on or watch a DVD. We didn't have downloads back then. And I remember that it was this bizarre situation where 4 hours earlier was doing the deed, as they say, in high intensity ops. And now I was talking to my dad about the barbecue he was about to have with his retiree friends. And he had zero understanding, and neither did my mom, about what I had just happened, because I had shielded them, I think, quite effectively. I later learned that my mom was on antidepressants and anti-anxiety pills for 10 years while I was in the military, because my brother and I were high-fiving each other in and out of combat zones, because he's a veteran as well. But it's that duality of being completely disconnected and in high-intensity ops, but also very connected to what's happening back in the real world and having to filter those things. And the reason why this kind of comes front to mind to me is that a lot of the pilots who are dropping bombs from the US are flying B-2s, which are the triangle-looking planes that are stealthy and can't be seen. Those planes are so secret, they're not allowed to land outside of America. And so they end up flying these missions from, I think it's a place in Missouri, that are like 57 hours long. So it's a huge round trip. But that means that the people who are those captains, majors, colonels that are piloting those planes that are dropping the bombs, they are literally waking up, kissing their families goodbye in the morning or in the evening, taking off for 2-3 days on a long flight, coming back, getting a nap, and then seeing their kids all over again and doing it. So it's a very weird duality of they're very much at war and they're very much causing significant amounts of damage on the Iranian government, the Iranian military, and then they're going and sleeping in the bed next to their wife or their husband and having breakfast or dinner with their child and going to a soccer game the next day. It's a very weird concept to think about.
That is, I'm a little bit speechless. I think when I go home and go out, and I sort of laugh in sort of confusion as I go home after a day at work and what I've sort of done and achieved, or how stressful or not stressful the day was compared to that is something I had never thought about. I guess the same goes to some of those drone pilots from the US who are sort of doing those strikes from a base.
A lot of them are out of Las Vegas, and so they'll be. But that's been going on for 20 years, 30 years. So, it's the weird connected but disconnected bit.
From a logistical perspective, do you obviously there's a huge gap between putting boots on the ground, as they did en masse in Afghanistan and Iraq, and how the war in Iran, or conflict as it stands, is unfolding. Do you see it as a natural progression that's where it heads, or is it more this is just, at any point in time the military can make a decision along the way?
I don't know where it can head. Again, I think goes without stating, I've been out since 2012, so I have zero insider knowledge. But you always want to the framework that I always look at these things is that war is an extension of politics. That politics can be domestic, that politics can be international, but it is still an extension of politics. You're trying to achieve something. And so once that's achieved, that's great. But the problem is that if you don't have it, just because you may have achieved something on your side, I don't know, let's just say unconditional surrender, you're waiting for that. The other side doesn't have to play along with that. They can decide we want to do that. They can decide we don't. If the U.S. decides that, oh, we've degraded their abilities to such an extent we can go home, if Iran keeps on launching the occasional UAV or the occasional missile or rocket at Kuwait or Saudi Arabia, the U.S. doesn't get to go home. If they decide that they want to start doing terror attacks in other parts of the world, the U.S. doesn't get to go home. And so seeing a next progression, I'm not sure what that would be, but the thing I would look at is there was this old Austrian or German philosopher named Clausewitz who did a lot of thinking about war and politics and what it is. And he talked about the Trinity. The Trinity was political leaders, military, and the civilian population. And that they kind of worked as almost like a three-legged stool. That if they were all three of them were standing up quite strongly, they could continue on in combat and being belligerent. But if you were to take one of them away in that trinity, then the stool would fall over. And so I would expect to see something on both sides trying to delete one of those or all three of those trinity players. You can see it with the U.S., what they're targeting of the political leaders in Iran, and you can see it with their targeting of the military capabilities of Iran, and you can see it in Iran's side launching at civilian targets with their neighbors, and also I think as far as Cyprus, I've seen has been reported in the news, and you can see that they're trying to play with that. And if the ability comes for them to, or the opportunity comes for either side to take out one of those legs of that trinity, then I think they're going to go after it. Just a matter of when and how, and if the other side can prevent it or absorb it. So I don't know what the next bit will be, but I do think that the U.S. can remain focused probably on political and military targets, and the Iranians will be more focused on how can they leverage the civilian will to support this conflict, either with their surrounding neighbor countries or the Strait of Hormuz causing financial markets challenges. Does that make sense?
Yeah, I guess what you're saying in some senses is to say this is going to last 3 weeks, 5 weeks, 4 months. It's sort of a silly question in some ways because it's not really up to any one country or individual anymore. I mean, the toothpaste is out of the tube and you can't put it back in.
Yeah, and I think the other bit is that people always like to dissect and analyze these things as if it's a logical problem that you can say, if I hit these three things or if I do this, obviously I'll win. War is not logical. War is emotional. People make quote unquote what they believe to be logical decisions to go to war, to start a war, but they don't end that way. It's emotion is what sustains. Was it Star Wars? Was that line that hope sustains rebellions? Yeah, hope is an emotion. Anger is an emotion. Logic I've never actually seen be a defining factor in when a war ends.
Leo, this has been hugely valuable. I think it's a take on the conflict from someone that's been in one that's I guess quite rare, especially for New Zealanders in some of these conflicts, and how it's also heartening to hear some of the things that you think about when from a military perspective from the US Army, because often in the media it's easy to put the US Army and military as sort of the bad guys in terms of how they behave, and really that's a political decision, but what people like yourselves did on the ground is you're doing it to the best of your abilities, and that's I think that's something that is often forgotten about the actual people doing the, as you call it, the deed.
I was amazed at thank you for sharing the personal side to it as well, I guess the framework, the legal, moral and ethical centrality of your thinking. Yes, as James said, it was really intriguing.
No,
So
I appreciate that. I think the thing that is common across all of the Western militaries is this concept of civilian supremacy over the military. If that happens, the military doesn't get a vote as to who and when you go fight. You just have to be able to do so, like I said, in a way that is legal, ethical, and moral. And it's no different. You just don't have to agree with the person sending you. You just have to make sure you do it in a way that you can, that is legal, ethical, and moral. Yeah. Say it over and over and over again. You can tell I've been trained quite well.
10 years hence or 12 years hence, you're still able to talk the doctrine. Leo, or as I fondly know him as Captain D, appreciate it. Thanks for coming on, and have a good what's left of your Sunday night, and let's talk AI soon.
Will do. And thank you for having me. It's been a great conversation. Cheers. Bye-bye.
fantastic. Okay. James is going to step to the side, and we're going to be joined by Mark Brooks now, Chief Investment Officer at NZ Funds, to make sense from an investments perspective of the dynamics and changes in financial markets. We're into the second week now, Mark, and how have you approached the conflict in terms of positioning client portfolios so far? And, as you're thinking about your answer or describing your answer, what about, defensive and protection orientated positions? How have they formed part of the portfolio?
Yeah, look, morning everyone, and morning Stephan. In terms of, I suppose, what is interesting so far is that actually, I might step back a little bit and sort of say, well, what is the typical setup, and kind of what path have we seen in the past, and is this different? It's probably the best way to think about it, and then we can talk about the types of changes in the portfolio. But so I suppose, generally, I think history tells us that if we look back at past geopolitical events, usually that first week tends to be the biggest shock. Typically, I think since 1950, the S&P has traded down about 4% on average. And then over the next month, most of that tends to wane, and actually markets tend to end up, I think, is the starting point. And if we think about, if I think about the way in which portfolios or markets so far, how this is kind of propagated, in many respects, actually, the US has probably been furthest away, both literally and figuratively, from the event. And a lot of that has to do with the fact that it is now self-sufficient in oil, so it has less of an impact. So, if I go through the list, areas that are more focused or oil importers have been hit harder, or importers. Certainly Europe is down sort of in the region of 5 to 6% last week. Asia, certainly non-China Asia, Japan, Korea, places like that were down relatively similar sort of amount. Korea is a different story. I'll come back to that one. But yeah, Japan down in that sort of 5% region. So those areas that are exposed to oil and or gas, in the case of Europe, have been more impacted by that. Areas like China, which is again a bit more resilient, has very large oil stockpiles and has been stockpiling for some time, down sort of 1 to 2%, and actually the US down 2%. So pretty muted all round. Other moves, again, probably relatively consistent with what you'd expect for an oil shock. US dollar generally a bit stronger. Interest rates actually quite a bit higher, and really that probably is a function of they have moved down a lot already this year, especially in the US. And, I suppose concern or questions over how this gets propagated through inflation, and whether that sort of means that central banks have to sort of step back and maybe not cut interest rates as much. So I suppose an unwinding. So from that point, it does seem so far that markets have been relatively orderly and generally adjusting in a way in which you would expect. Probably the one that is typically does quite well in these events is gold. So talk about hedges, etc. Generally, you wouldn't expect probably in the first part, interest rates to be a useful hedge because of that inflation aspect. Second, something like gold typically does well in this event, but it is very well owned at present. So it has backed off in the last week, and gold was down, what was it? Down 1.7% for the week. So within that, we've talked about, and I think talked on the call last week about hedges we've had in the portfolio. We do have oil in the portfolio really for this event. We do have significant gold positions. That's in the short term probably hurt the portfolio, but very happy to own those at this point. And again, coming back to probably the wider question is we still remain positive that global growth is strong. And this sort of becomes, I suppose, the biggest question with what is happening is what is the magnitude and what is the duration? And one of the real challenges the market is, I suppose, grappling with at the moment is what is the distribution of this outcome? Potentially there could be an off-ramp really quickly, in which case everything goes back to normal, although equally it's kind of hard to see where that off-ramp comes. So from that point, market is sort of having a little bit of difficulty pricing those at this point. So,
and I guess is that one of the bigger challenges is how do you balance off, on the one hand, a geopolitical shock, conflict, which has in certain sectors quite meaningful impact. On the other hand, a backdrop which is really constructive, pre this, declining inflation, strong global growth, lots of different areas where, in sectors that are doing really well, massive AI investment, with the prospect of potential productivity leap. And so how do you trade those two sort of conflicting forces?
And I think in some of this it actually got missed. You had, was it weekend before last, as they started this, as the Iranian conflict started, you did have US services PMI came in at the highest since 2022. So 56, that's a really bullish, strong signal that actually the services part of the US economy is starting to fire on all cylinders. So you, stepping back again, you have an environment where actually the US economy is probably in a position where it's likely to sort of record, it seems on track to record somewhere between a 2 and a 3% real growth this year. Yeah, that's coming into effectively, given where inflation is, you're talking a 5 to 6% nominal growth rate. That's pretty strong. So in some respects, again, if we think about market positioning, generally there has been I suppose, a theme this year of a continuation of what happened last year, where the sort of trade was away from US assets towards Asia, towards Europe. That, what is happening out there actually pushes people back and unwinds some of that back towards the US. And I think the other one that we are seeing, and again, you sort of touched on that AI discussion, is, there's clearly uncertainty about, there's a lot of belief that AI will bring a productivity gain, uncertainty as to who are the winners there and equally who are the losers. So there's been quite a shift in the market back towards things like, there's a new term out there, HALO, hard assets, low obsolescence. So again, sort of infrastructure, utility assets, those sort of traditional assets which probably can benefit from AI, but are not likely to be disrupted. And they've actually performed really strongly. So
it was interesting, right? And I'd love your thoughts on this. You mentioned the S&P 500, the US, I guess, index was down, one or two? Two change? Yep. And yet, with under the hood, so that's the top line number, under the hood, there's quite a lot of change. Where are you seeing that? And what is that a function of also, I guess, a move to more of these halo companies?
Yeah. And I think the most extreme example of that, and I don't think it's necessarily, you've seen a big move away from software companies. And one of the most extreme aspects of that is something like Microsoft. It does end up being the largest company in the software sub-index. So a degree, you could argue it's been slightly tarnished by people wanting to sell specialist software companies, ones which they believe are threatened by AI. You now have a situation that something like Microsoft actually has a PE lower than the S&P 500. And you've actually seen a number of these materials, industrials, start to really move up, and in many respects, actually, I suppose, on a pure PE basis, which becomes a slightly nuanced discussion, often because these assets have quite large depreciation levels. But on a pure PE basis, some of these sort of old world assets are now looking slightly more expensive than some of the fancier tech names. So you've had quite a violent redistribution underneath the market, even though the S&P itself, or the broader market, is quite, I suppose, relatively unchanged, down small year to date. So I suppose, again, you've got these different shocks propagating through the market, and on the surface it looks relatively calm, but there's quite a bit going on underneath.
Growth to value or defensive to cyclicals?
Yes. And for so long, people have sort of questioned as to why valuations and tech valuations, and actually you're seeing a lot of this rotation happen under the hood. And in some respects, the actions in the oil market really only just emphasize that again, pushes you towards the electrification process, pushes investors towards those who have electricity and those sort of AI type issues really again.
So the way NZ funds investors, we have a slightly broader toolkit than many, and we can use protection tools, so some derivatives, universa, commodities for diversification, and generally we a broader range across different regions.
Yeah.
How do you think about that diversification benefit, and then how do you think about harvesting the gains or realizing the gains as they unfold?
Yeah, I think that second part is the really critical part. Is we want to make sure that the portfolios, certainly given we have, I suppose the starting point is a positive view on the year. We think that this year, not despite what's happening out there, has the potential to end positively and very positively. So we want to be invested. But at the same time, one, we will be diversified globally, and really to make sure that we sort of harvest those different areas, tech, value, regional differences, etc. But also have an ability to have assets that can yang when markets yang, and really sort of to help, I suppose, not mitigate, but help cushion events like we're having, whilst we retain being invested, because we do think there is potential for this to be a solid year. And again, in the sort of discussion earlier that we had earlier in the year, sort of felt that chance was we had a setup for a positive year, but certainly expected volatility along the way, and this is probably part of what we're getting. So in terms of the portfolio, the key areas that we look to do that: one, diversification, so across different areas. And again, we have a large allocation to New Zealand. At this point in time, New Zealand is a long way from the oil market, long way from the conflict. Certainly it's down, sort of 1% for the last week, but that's a relatively small number in the scheme of things. And you've got a New Zealand market that is full of those sort of heavy assets, the electricity companies, infrastructure names. So actually that sort of provides a stable base, maybe not the strong performance that you can get overseas at times, but a stable base that gives you strong dividend yields. Then we have that wider group of assets, the likes of gold, the likes of copper, oil, Bitcoin, etc. Really just looking to provide diversity. Strong believers in that gold continues to have a diversification capability in this market, and there are very strong supply and demand issues at play there. Copper, at the moment, relatively underweight copper. Still think you have a very strong supply and demand story medium term, but short term, and especially what's happening, that becomes a little more challenged. Oil recently in the portfolio has been brought in to, I suppose, provide that specific diversity, because again, as we sort of talked about, things like interest rates, which we also have in the portfolio, don't tend to work too well in these circumstances. So, and the other one we have, and in terms of the harvesting, we did add a small S&P put position to the portfolios back in January. Really just, again, I suppose if I go back, Universa is there for the really large, vicious, short, sharp market drawdowns. Our view was that wasn't likely, but we could see a degree of volatility, and just adding a little bit of mitigation in terms of S&P puts was useful. The approach we've taken there is really, as it trades up and is in the money, just chip it back to where we added it in the first place. So 1%, say, premium position gets up to 1.3, we chop it down to 1. Again, if it gets up to 1.3 again, chop it back again. And similar with the likes of gold and etc. So we've looked to take profit, but move it back to levels where sort of our target levels. So really just looking to sort of bank those profits where we can. And we think that's the best way in terms of this. Is certainly given, I think the biggest challenge for everybody, as I touched on before, is that question of magnitude and duration. And it is entirely feasible that, and it's hard to see, but it's entirely feasible that there is an off-ramp, and a very quick off-ramp potentially, as to what happened. I'm not sure what, I didn't get to hear the earlier conversation, but one of the points made over the weekend was that in terms of the Iranian response, a lot of that seems to have been a planned exercise that essentially put it on autopilot. So the expectation was a lot of the leadership would not be around or not be able to communicate. That autopilot process probably only lasts a couple of weeks. After that, you start to run out of, you basically start to run out of munitions, etc., and you can't restock. So you might find that we get to the end of this week and actually it becomes a very different outlook than it was at the beginning of the week.
Okay, that's really, really helpful. With the portfolios that we build for clients, there's the three categories. We've got the growth, and so that a lot of the comments you were making earlier about S&P 500 puts and Universa and so forth, and orientated towards the growth portion. Then we've got at the other end of the spectrum, cash and income, which is the near-term spending needs. And then in the middle, we have what we call the inflation category, and that tends to be defensive shares, so property, infrastructure, and utilities. And there's a split between New Zealand and Australia and global. How do you see, and the inflation category is a really, really important part of client portfolios because it has the ability to pass on inflationary shocks over time, and the companies within it, or the securities within it, tend to be really strong franchises with high cash flow generating capacity and the ability to pass on pricing differences to their customers through time. How do you see that being impacted? Is this longer term a positive or a negative, or is it sort of neutral or just pass through?
Well, they've really been, I suppose, that part of the portfolio has been the key beneficiary of that halo discussion. Sort of markets looking towards hard assets and really predictable cash flows that utilities and infrastructure and property do have. So one of the quiet standouts this year has really been those global sectors. And prior to this, most of those were up circa almost 10% this year. So really a whole year's return had been had happened within the first 2 months of the year. I think, again, around those areas, in many respects, this kind of reinforces that process. Is you've got that shift not only towards electrification, but also that shift towards, I suppose, self-sufficiency and local production happening. So where that sort of deglobalization process, and all of that just puts more and more demand on those core assets that we have. Need more. You need more electricity. You need more infrastructure, be it water, be it roads, etc. So I think perversely it actually plays back into it re-emphasizes the strength of that asset class. And generally investors, after so many years being focused on technology, are in many respects underweight. And you're seeing a move back to that sort of, I suppose, wish for a more broadly diversified portfolio, and that really suits that space. At the same time, we have that also has the luxury. It's strong dividend-paying sectors often, and they're relatively resilient. Is global property particularly impacted by oil? No, it's not like it's sort of an airline business or something, or transportation business. So, in that sense, those areas have traded down over the last week. Not surprising, the market has, but we do see it as being really well placed, and we're pleased to have it as a defensive part of clients' portfolioes.
It's really hard to make a dam or build a new airport.
Yeah.
So, and from time to time, it strikes me,
or to create the electricity to make that dam.
That's right.
Yeah.
The zeitgeist sort of focuses on one big, like tech has been for the last wee while, and then everyone has a come up its moment and goes, "Hey, look, these things are really, really important too," and so the cycle goes. Okay, hey, last question from me. It's been a really useful discussion, Mark. But if you were a client or an investor looking at this conflict, and I guess the ripple effects it has across the world, both investment and beyond, how would you, what mindset would you bring to that question?
Yep. Look, I think, again, from our point of view, we do think the setup out there, global economic activity is strong, kind of Goldilocks, not too hot, not too cold. You've had interest rates cut. You continue to see governments spend. And if anything, this probably creates more of that, if nothing else, through depletion of defence assets. There's likely to be more of a push for defence spending. Europe has increased its defence spending. That's more likely to increase that again. So that is spending by governments. It is consumption. That is positive. So you have that. So your foundation is strong, and we do think the setup for the year is positive. Markets have pulled back. This is probably a real opportunity, I think, to actually, to add to investments at this point. And actually, given history, typically these sort of geopolitical moves fade from market consciousness. And to be ultimately what drives markets, and share markets especially, is earnings. So ask yourself, do you think this will impact earnings of companies in New Zealand? Do you think it will impact earnings of companies in the US? And the answer there is really about, I suppose, the duration of this. If we end up with oil, Brent oil sort of in the mid-80s at the moment, if it ends up at sort of $80 for a period of 6 or 7 or 8 months, yes, that will take a little bit, maybe 1 or 2% off earnings. But if this is a 1 or 2 month event, it's unlikely to have that strong impact. So from our point, we actually think it's a really positive time. And again, coming back to the original discussion, felt there was a positive setup, but we would see volatility this year. And then, that's when you see volatility, that's the point where we do think people should step in. And if clients are going through, say, a tranching process, that's the perfect sort of process to have that opportunity to basically buy when things are on sale again.
Yep. Yeah. Thank you, Mark. It's been great to get your insights and I guess give us a bit more context in addition to the conversation we had, the special edition from James last week. We thank you everyone for joining us, and we look forward to speaking with you again soon.
Thanks all.
New Zealand Funds Management Limited is the issuer of the NZ Funds Active Income Series, NZ Funds Active Inflation Series and NZ Funds Active Growth Series, together the NZ Funds Active Series, as well as the NZ Funds KiwiSaver Scheme, the NZ Funds Managed Superannuation Service, NZ Funds Wealth Builder and NZ Funds Income Generator. For further information or to request a copy of the product disclosure statement for each of these, please contact NZ Funds or visit nzfunds.co.nz. This recording is provided for information purposes only. The information provided is not intended as a substitute for specific professional advice on investments, financial planning or any other matter. Past performance is not an indication of future returns.